everybody. Welcome to the show. Today I'm here with Ashley Miller of Alibel Mortgage. Ashley, thank you for taking the time today.
Yeah, you bet.
Awesome. So, I just want to get started by asking, how's the market looking for mortgages right now? What can people expect if they try and get in or apply during COVID?
Well, the market is kind of crazy right now. So because of the CARES Act with the mandated mortgage forbearance plan, lots of people are taking advantage of that, and that has a negative impact on the mortgage industry. So the other piece to the lending thing right now is that lots and lots of people are getting laid off. So the lending landscape has changed a little bit, where we're having to re-verify borrower income like the day of closing to make sure that they haven't lost their job. Or
Oh, wow.
If, we used to be able to include rental income with no reserves, but because of the CARES Act allowing renters to push off their rent payments, now lenders want to make sure that the borrower has more money in savings to cover the rent payments if the tenants don't actually make those payments. So there's a lot of new lender overlays. So there's guidelines that are put out by Fannie Mae, Freddie Mac, and Ginnie Mae, the three main government-backed entities who buy mortgages. But on top of those guidelines, each lender has their own specific overlay. So in addition to those guidelines, we're going to require that these things are met. Some lenders are capping the debt to income ratio at 40%, regardless of if the file is approved eligible. And some other lenders are capping the credit score at FHA loans are, for most lenders, are capped at 640. So if you're below that, you wouldn't be eligible for FHA right now. Whereas prior to the meltdown, it was a 580, or as approved by the underwriting software. So there's a lot of unease in the lending world right now, and lenders are just being more conservative in approvals. But we're brokers, so we kind of have the opportunity to take advantage of what lender doesn't have a certain overlay that this one does, and we're still able to get our files closed and overcome those obstacles. It just is a little bit more work right now.
Well, that's good. And that, on a side note, I always tell people to go to someone like you as opposed to directly to the bank for that very reason. It's, obviously with the bank, there's a set, programs that someone can get,
Yeah.
but going to you, you have a lot more available to you and your clients.
Yeah, for sure. And my job is to fight for my clients. And so it's not uncommon for an underwriter to disagree with me on one issue or another, and we're able to disagree with the underwriter and get our way more often than you would be able to with a bank. So we have a lot more flexibility than Chase right now isn't doing loans for people under a 700 FICO and a 20% down payment, which is crazy.
Wow. Well, outside of mortgages, they're not really doing anything.
Yeah.
Well, on a side note, they shut down notaries, which really hurt me.
I'm sorry.
But so with all this going on, there's a lot of talk about 0% or even negative interest rates. Now, this doesn't quite mean for the regular person what they think it does. Could you clarify that and maybe discuss what the interest rates now mean for your average home buyer or somebody trying to get a mortgage?
Yeah. For sure. So a common misconception is that when the Fed cuts the note rate, then it's called the APOR. When they cut that, people usually think that equates to mortgage rates, but it doesn't. The Fed rate is what businesses can borrow money at. And so basically when there's a 0% interest or a negative interest that's set by the Federal Reserve, it's so that the cost of borrowing money is less for businesses And the reason that they do that is to boost the economy. So they're trying to get businesses to be able to afford to borrow more in order to hire more people and boost the economy. So when that happens, it doesn't always lead to a decrease in mortgage rates. It actually often leads to an increase in mortgage rates, because then typically businesses will borrow more money and their output looks like it's more, and then investors will pump money into the stock market and pull out of mortgage-backed securities. And when people pull out of mortgage-backed securities for a riskier investment in the stock market, then the mortgage-backed security value goes down, and then our interest rates go up. So what's happened most recently with the market is that the Fed cut the interest rate, but then coronavirus came in and the business world has kind of collapsed and investors are panicked. So they're pulling everything out of the stock market. But now with the CARES Act, tons of people are going into forbearance, and which means that they're not making their mortgage payments, which means that the investors don't get their money. So now mortgage-backed securities used to look like a really safe investment, but now it's kind of like with 50 million people unemployed, investors are scared to invest in mortgage-backed securities also. So the stock market's not doing well and the mortgage-backed securities aren't doing well, and that leads to an inflation in interest rates. So where does that leave us today? Interest rates are still at historical lows if you go to a lender who has options. Since March 9th is really when the market blew up, and interest rates haven't been stable since March 9th. It's not uncommon for us to get a fluctuation in interest rates, like a full % in note rate in one day. So it's very volatile. Every time anything happens with the market, interest rates immediately flip, and they can go from one day. But that's where it makes sense to have an experienced mortgage advisor who can watch the rate trend and lock for you. We do have some rate term refinances right now with decent credit and low loan to value that we've locked at like 3.375. So interest rates are still really low. It just kind of depends on what the scenario is. For lower credit score borrowers, the cost of financing right now is going to be pretty expensive because lenders are not wanting to take risks on those borrowers. So for well-qualified buyers, the interest rates are still really low. For not so great of buyers, the interest rates are quite high right now just because lenders are trying to mitigate risk.
Oh, certainly. And for anybody who's listening, to summarize, so the low mortgage or the low Fed rates are don't apply to regular borrowers. It's really just the signal to bring more money into the mortgage-backed securities market.
Yeah. So the decrease in the Fed rate really benefits business expenditure. So businesses can borrow at a lower interest rate, but that doesn't always equate to a drop in mortgage interest rates because those are tied to mortgage-backed securities.
All right. And so I know you already touched on this, but have you been seeing more or less interest in refinancing just from our general area, the Northern Colorado area?
It's been pretty steady. So like in February and early March, refis, I was getting maybe 3 calls a day about refinances, and that's tapered off a little bit because the market is so volatile, but we still are working on several refinances. So part of it is that we're not out like asking for business because of we want to give our borrowers the best experience, and there are a ton of extra conditions that are being added right now because of COVID. And so if we know that interest rates are going to be stable for the next 3 months, then we kind of want to get through the craziness before we start looking for refinance business. The other thing is that it's likely that mortgage rates are going to go down significantly in the next 3 to 6 months. During a recession, mortgage rates are typically pretty low, and we're like pretty much guaranteed that we're heading into a recession. So for those borrowers who don't need to refinance right now for whatever reason, my suggestion to them is to wait and see what happens with the market, or if they're insistent on starting, maybe getting through the process and then watching interest rates to see where they go. But it's likely that interest rates will be really, really good in the next 3 to 6 months. So.
Oh, well, that's definitely some good news for somebody trying to, eventually at least get a mortgage or do a refi there. And that's what I've been telling a lot of folks too, who have been just asking me about buying or selling homes. My general recommendation, unless you really need to move, is to wait, because right now is probably not the best time to be active unless you really need to.
Yeah, and yes and no. So interest rates are still fairly low, historically speaking, and especially in northern Colorado, we're a little bit sheltered from the market fluctuations that you see in housing prices. Even like with the big housing crisis that happened, the housing values did go down a little bit, but not significantly. And since this is such a sought after area, I don't see market values declining too much. But like, so but we're still seeing people going under contract with multiple offers on properties. So it's interesting to see that in our area, real estate hasn't really slowed down all that much because interest rates are so good right now, and we're coming up on the busy season. So.
And that was definitely a big surprise to me, especially since too we haven't been allowed to, or technically allowed to do showings or open houses or anything. A lot of people actually have to put the place under contract before going to see it, which it seems crazy to me, but people are doing it. So
yeah, it's insane. Well, I have a client who is relocating to Idaho, and they just put their house on the market, and it's over $500 list price. And you would think in that price range that people would for sure want to see the property. But they went under contract at full asking price 2 days after it was listed without having any showings. So I don't know. I wouldn't buy that, but I've seen it, but people do.
Well, thankfully that particular restriction is ending soon.
Yes.
And so one thing I did want to ask, for an individual who is receiving or is receiving any sort of stimulus money, whether it be the $1,200 that went out or just the pandemic unemployment insurance or assistance.
Okay. Yeah.
How is that going to affect, their mortgage application process? Now, obviously, somebody who's getting unemployment assistance probably isn't in the market for a house, but say you came up with somebody that did, what would that look like as far as their application process goes?
So we can't qualify people on unemployment income because it's not guaranteed it's not expected for a 3-year continuance. So for people who are unemployed currently, we wouldn't be able to get them approved. But as soon as they were able to find employment again, and it's stable employment, then we would be able to use their current rate of earnings. So let's say an hourly employee gets laid off and they're unemployed for 3 months, and then they find a new job and they're employed at 40 hours per week every week, and they make, $15 an hour. Then we can use that $15 an hour at 40 hours per week to qualify that borrower, even if there's a gap in employment. So the riskier files that you see is like if people have had 3 or more job changes in the previous 12 months, then those files have to be they're looked at a little bit more in depth for income stability. But we're not gonna be penalizing people for having unemployment during the pandemic. We're gonna, as soon as they're back and are wage earners again, we're gonna be able to count that income. So for self-employed borrowers, it's a little bit different. We're not really sure how that's gonna pan out right now, but the lender overlays that people have been putting into place, and this isn't true for every lender, but for a lot of the lenders that we work with, they will require a 25% reduction in self-employment income unless the borrower has 12 months in savings. So like 12 months of what their debt payments are in savings. And that can be a 401k or a stock account or anything like that. And the reason for that is because the COVID-19 closures have had a big impact on self-employed borrowers' businesses. So they want to account for temporary income reductions for the current year. And it's unclear how that's going to change once everyone's back to work. But that's kind of what they're doing right now, is a reduction of 25% income for self-employed borrowers, unless they can show money in reserves in any shape or form. So like, let's say a borrower is self-employed and they got a PPP business loan for, $100,000, and their liabilities are $2,000 a month. Then they can show that 12 months in reserves, even though it's money from a PPP loan. They wouldn't have to reduce their income by that 25%. Does that make sense?
Yes. All right. Well, that was definitely a real informative about, what's going on in the market right now. I kind of wanted to shift over to, you and your business, because we do have a lot of entrepreneurs and real estate professionals that listen to this show, or at least getting there. We are just getting started. But how did you get started in mortgage?
So my start is a little non-traditional. My sister was a loan processor for a while for a guy in Boulder when she was going to school at CU. And then she became a loan officer, and then she opened her own mortgage company with her husband. And then when they split up, they dissolved their mortgage company, and Jessica and I opened a mortgage company together called Stewart Financial Services. And that's when I was at CSU for my undergrad. And Jessica and I worked together for like 3 or 4 years. And then when, sisters working together doesn't always work out the best way, and we kind of had different ideas of our business model. So Dave and I decided that we were going to open our own mortgage company and do business on our own. So I gave Jessica Stewart Financial Services, and she still has her company down in Parker. And we opened up Alibel Mortgage with just the two of us. So the cool thing about being a broker is that you don't have to have a brick and mortar shop. Like, we have a home office that's legit. We have computers and things like that. And like, we have security and stuff, but we're not, our expenses to operate our business, we try to keep really low so that we can compete, like have the best rates and fees and things like that. So it wasn't a huge investment for us to open up our own company, but when we first started, it was really part-time. I had just had my third baby, and I had just started my last semester for my electrical engineering degree. Like 3 days after he was born, I started my last semester, and we had just opened up this company. So it wasn't something that I was like gung-ho about at first. But as my kids have grown and I've needed something to exercise my mind, I've gotten more into it, and now it's like Dave works with me full time now, and it's our primary source of income. So it's definitely worth it for all those aspiring entrepreneurs out there. It didn't start out like we were making a ton of money. It was actually not very much to start out, and it took a lot of years to build up our base, but it pays off if you stick with it.
Oh, for sure. Or my first year as a real estate broker was just awful. I cried a few times. Uh, and starting this podcast is also very slow and arduous. But, you got to put the work in and get to a good spot eventually.
Yeah.
So what would you say to like a brand new mortgage broker or a real estate professional who just got licensed and ready to go? When did COVID start officially? Say March 27th. What would you say to someone who was just set up and ready to do business on March 26th?
Ooh. Make some face masks. I think that learning how to take advantage of technology is going to be a big game changer for the people coming into this business right now during this time. One of the things that I would say is like, try to keep your head up. And it's a great time to get in contact with borrowers because a lot of them are working from home, so they're available during the day. I don't know what cold calling looks like for real estate brokers, but I've heard that some of the KW agents in the Loveland office have had really good luck cold calling, and that sucks. I'm sure that you get a ton of rejection, but if you work at it, it's certainly going to pan out somehow. And so I would my suggestion would be to take advantage of your resources. And I know that people say this all the time, but Facebook is a wonderful avenue for sourcing clients. And they may not be like the $500,000 perfect credit clients. They may be like the worst clients that you can imagine with the worst credit. But if you fight for them, they're going to be a loyal customer and they're going to refer everybody to you. And I think most of all, it's just exposure. When I first started out, I didn't have any lender or realtor partners. I didn't have any, like my friends didn't want to use me because I was just brand new and they didn't want to trust me with that. And so when I first started, I was all over Facebook. And that was like, going into the community pages where they sell stuff and just talking to people there and, posting an ad somewhere where people like crush the misconception of home buying. People think you have to have, $40,000 to buy a house when really it's as low as nothing if you have the right loan product, or $1,000 with Chafa, or 3% on conventional, or whatever. It's really not that much money. So I think that the best advice I could give somebody is to take advantage of the resources that are available for you. And Facebook is one of those things, not only because it puts you in front of more people, but also because people ask you hard questions and you have to find the answer for those. And then you build your knowledge base, which can be an awesome tool for you to use. So even if you never source anything for the first week or whatever, it's all great exposure on Facebook.
Oh, absolutely. And it is a lot of work, but it is worth it in the end. I know I've sent a lot of unqualified buyers I've gotten from Facebook over to you, and it didn't work out, but you got to sift through them. It really is a numbers game.
Yeah.
And for the audience out there, I got a video dropping tomorrow on my YouTube channel about the simplest, coolest Facebook funnel ever. And it was responsible for a lot of wasted time for Ashley here. So
oh no, yeah. No time is wasted.
Oh yeah, well, just sort of sending all these unqualified buyers until you find the one that can. And then one thing about Facebook too, I'm not complaining because it is worthwhile, but things to look out for, it's like you get some people that get so close. You're right there on the precipice, and then something happens and it doesn't work out. You just got to stay the course, stay persistent, and eventually you will get a good one on the line.
Yeah, for sure. Be persistent.
Oh, absolutely.
Success is made. Persistence.
And touching on cold calling, I think that's really useful right now. Maybe not in like a direct way. I certainly haven't been directly cold calling people as a realtor, or I've been mostly just going through my phone trying to stay in contact personally with people.
Yeah.
just people I know. Hey, how you doing? What's going on? You can usually spark a good half-hour conversation, especially when, nobody's doing anything right now and everybody's got
Yeah.
plenty of time to be on the phone. And that could really, push things a lot further.
Yeah.
Now, go ahead.
People like to use their friends, but they have to know what you do. Like Cammie just came over. She used to work for the Keller Williams Loveland office.
Oh, I know Cammie.
Yeah, she's awesome. She's over there.
Oh, hi, Cammie.
Started here, and Cammie is really great at fostering relationships. And like as a new LO, she's already sourced 4 refinance transactions from people that she knows. And
that's awesome.
People really want to refer business to you, but they're not going to be able to do that unless you tell them what you do. So make sure that your friends know that, like, and it's not uncommon for a borrower to text message me and say, hey, is it cool if I give your number to so-and-so? Yes.
Yeah, please. Please do it.
Number to everyone you know, because that's the only way we make money. So definitely, like, we don't want to be fake or whatever and foster relationships with the expectations to get something out of those people. But it's a really wonderful opportunity to connect with people and figure out what's important to them. And one of the things that Dave learned in B&I, Dave's my husband, is that when you are building relationships with like a referral source, it goes a really long way to find out what you can do to build their business as well, so that they know that it's not just a one-sided relationship, and that goes a long way too. So definitely taking advantage of your existing relationships is a big thing for sure.
Oh, definitely. And someone wanted to ask you too. I did ask Jesse Engel from Keller Williams a similar question, and I put a clip of it all around Facebook. Do you think it's appropriate, I guess, morally, ethically, to be actively out there prospecting? Because it's something I kind of worry about, because so many people out of work right now. You never know, even if someone's putting on the happy face like everything's okay, you never know if someone's like really hurting financially. And my fear is like getting someone on the phone, trying to talk to them about real estate, and they're just not the person for that. They don't want to hear from you, etc. Do you think it's appropriate to be out there actively prospecting, or is it more of a soft touch better? I'm sorry?
Going door to door?
Well, obviously that's out of the question now. Okay. But I'm talking just in general.
Out there prospecting, probably not. You probably don't want to knock on people's doors unless you want to get shot. But I think that, yes, I think that it's a wonderful time to prospect. So for myself, I have a ton of clients who are in the market to purchase right now, and we're doing pre-approvals every day. And so the market is like, we see the doom and gloom all over the news about how many people are dying and how many people are out of work and how horrible the world is. But then you talk to, 20 people in 1 month, and they're not affected by COVID-19, and their life is still going on, and they still need a lender and a realtor partner, and they still have aspirations and things like that. So I think that it is important for people who are looking to prospect to get away from what the media tells us is happening in the world, because that is a very narrow view of what's happening on a grander scale. And sure, there are people who are going through hard times right now, and people who have lost their jobs and things like that. But there are a majority of people who have kept their jobs and still want some sense of normalcy in their lives. And so, yes, I think that, it's okay to reach out to people, especially with the mindset that they may be going through something difficult, but a lot of people are at home alone, and maybe they want to talk to you.
Yeah.
So maybe it's a conversation that you're helping them out. You just never know. Like, somebody may be praying that they, for guidance on buying a house, if that's the right decision or not. And then all of a sudden you call on the phone and you answered their prayer. So you just never know. I think, yes, you should prospect right now. You should not be paralyzed by what's going on around you, and you should be aware of what's going on around you, but not let that stop you from being, excited about where you're at.
Well, so yeah, maybe the question shouldn't be, is it appropriate? It's how to prospect appropriately. Yeah, maybe that's a better question. And go ahead.
Yeah, I mean, if it were me cold calling or prospecting or things like that, I would start the conversation with, hey, my name is so-and-so, and we're doing prospecting calls, but first and foremost, how's your day going? And I think people are a lot less likely to put the shield up if they know that, like, you're not just, I don't know, if you can ask them about themselves before you ask for something from them, it's much better received.
Oh, definitely. Now, a big part of your business is the reputation you've built. Just to sort of fill people in who may not know, Ashley is like the big broker or mortgage broker around here. All the realtors I look up to recommend her. I've actually sent my mom to her. And on my very first deal, she really saved me there. So yeah, she's just great. And that reputation really precedes her. Now, what kind of strategy do you use to foster and grow that reputation you have around here?
Okay. So first and foremost, the most important aspect of my business perspective is that my clients are happy. So I don't approach every transaction with what my bottom line earnings are going to be. Like, I've done, in different scenarios where I wouldn't be able to get the transaction closed unless I, used my compensation to pay for something or whatever it is. I've done that. I've done transactions for free for people because I want to foster relationships. If I write a pre-approval, I'm going to get that loan closed no matter if I have to fly to the underwriter's house and argue with them about it or not. And I think that people receive that well. They know that I'm not I am invested in their success too. And I think some lenders might walk away from a transaction if they knew that they weren't going to be able to make money on it. But instead, for me, it's like a challenge to get it closed no matter what. And so I think that in any business, that people's motivation should be cultivating relationships over what their bottom line dollar amount is from each person. And if you look at it that way, in you're building relationships and showing interest in other people are going to remember you over somebody else that's all business. And I don't know if it's different for men, because I am a woman, and I know that women typically focus on relationships and men typically focus on business, and that's totally fine. But for me, the relationship aspect has helped me build a reputation, especially where maybe I did cut my compensation out on a deal to get it closed, and then the listing agent on that transaction started referring business to me because that happened and they wanted to be a part of that. So definitely doing what's right for people and building relationships is where it's at, and follow through with what you say you're going to do. If you say you're going to call somebody back at a certain time, call them back. Because if you don't, and you referred a client to me and I told the client I would call him back, and then I never did. And now your client is like, what the heck, Cameron, why did you send me to this degenerate who doesn't care about me? So definitely follow through and set the right expectations.
Oh, absolutely.
And over deliver every time.
And that brings me to my last question for you, which is something I ask everybody I have on this show, regardless of what they do. What can any sort of professional do for free today to help improve their reputation in the professional community? That's a tough one, I know.
What can they do for free?
And today, make it even harder.
And today. Do you have a website?
I do, yes. Well, if you're asking like the imaginary person we're talking to here.
So I think that, and I don't know that it's necessarily free, because I know hosting can be cost money, but I know that you can get hosting for pretty cheap. And correct me if I'm wrong, but I think that you can get access to like WordPress to build a website that's free. Isn't WordPress free?
The basic is, and I'm actually going to do a tutorial how to convert the free and super cheap, easy or cheap WordPress to the more professional one, like take off the banners and ads and stuff.
Yeah.
But what I always tell people who want to do it themselves, they don't want to hire someone, get the WordPress Professional. It's like $80 for the year, I think. Okay. Then go on Envato. It's a digital asset store, and grab yourself a template. You can get a really slick looking template for like $30 to $50, and you can have the whole thing going in a day for around $130 to $150. And nice. That's usually the easiest way to get like really professional results without having to hire somebody as far as websites go. Yeah.
So I think that the number one way for people to build legitimacy is to have an online presence. So LinkedIn, Facebook, Twitter, those types of things, and a website where if somebody Googles you, your name pulls up and they can see that you are like a legitimate real estate broker instead of some stalker that wants to come and look inside their house. The other thing is that if you can share knowledge that you get, so one of the things that I really like to do is like, I need to know what's going on with everything anywhere that's happening ever with anything. And so like I read the dictionary as a child because I'm weird like that. But then sharing that knowledge with other people through like a blog post or a social media post or like a market update or whatever it is, gives you some legitimacy to people so that they can see Cameron is a real estate broker and he knows what he's talking about. He's gone and done research on all these things and compacted it for me so that I can read for 5 minutes and know what's going on. That is free. You don't have to pay anyone to read the CARES Act, and you don't have to pay anyone to read what's going on in the stock market or what's happening in the real estate industry or, things like that. So sharing your knowledge with others out there, that's something that can for sure give you a good reputation for knowing what you're talking about. Just make sure that you actually research it and you're not just like,
oh, definitely.
That can backfire if you're not careful.
Oh, definitely. Well, Ashley, I think this whole episode has been really informative. I really want to thank you for taking the time today. I know things are crazy with your business and you got the kids home too. So I'm just really thankful you took the time out of your day to come do this with me.
Well, thanks for having me. We appreciate it.
Oh, absolutely. So, hey, somebody wants to get a loan from you. Tell folks how to get a hold of Alibel Mortgage and how to get a hold of you.
Okay. We have a website. It's www.alibelmtg.com. Or you can find us on Zillow or Facebook at Alibel Mortgage. And we have an online loan app that you can do everything online, or we answer email and text messages all hours of the day and night. So, or get a hold of Cameron and he'll tell you how to get a hold of me because he's
She is my number one person I send people to for loans and mortgages. So she's at the top of my recommendation list 100% of the time.
Thank you. I appreciate that.
Awesome, Ashley. Well, thanks to you again so much for being here, and yeah, take it easy, everybody.
Yeah, you too.